Be Wealthy and Smart, episode 958.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, I have such a treat for you. This is actually my anniversary of 7 million downloads. Yes, this is so exciting that Be Wealthy and Smart is just about to cross 7 million downloads. And I want to thank you for tuning in on this episode and for any prior episodes you've been listening to. It means a lot to me that you're here and come back week after week. And my intention is just to bring the most important financial news that you need to know, and also a perspective that you're probably not hearing out there from a lot of other people. For example, right now there's a lot of doom and gloom. We've had that ever since the pandemic started, where people have been predicting a crash, predicting that the markets would fall apart, that we'd have a depression. There's so much fear, uncertainty, and doubt out there. And if you've been following me for any length of time, you know that hasn't been my perspective. And I've been fortunate to be right on track with that. So this is what I want to bring to you, is accurate news that is from trends that I follow and cycles that I follow. And one of the most interesting people I've come across in my career who deals with cycles is Dr. Charles Nenner. I mentioned Dr. Nenner in my Wealth Heiress book and in my upcoming book that's coming out, which I'll talk about in a minute. But Charles is a very interesting researcher and is the first one that really opened my eyes that maybe the stock market works differently than what we think. And that was a very unusual mindset change for me because I'd been working in the field for over 25 years. I was very set in the mindset of typical Wall Street, which is news-driven, which is very quantitative, which is not esoteric whatsoever. And it wasn't until I stumbled across Dr. Nenner, who was on television on CNBC, and he said he had been a market timer for a company with the initials GS, and that intrigued me because I knew they had a phenomenal track record for performance. I knew that if they were doing something really different, it was probably because it had merit. And yet it was so different from anything I had heard before, it really took me aback. And it started me digging and researching and trying to find out what was really behind this, which led me back to 1929 and Herbert Hoover as president, who wanted to know what caused the Great Depression. And in that time, he hired a well-known economist in the day to find out what exactly caused the Great Depression. And the answer that came back was startling. The answer was cycles. And what they found was there are so many cycles, thousands and thousands of cycles in all of nature and in financial markets. Now, that might sound strange to you, but think about the fact that we follow Fibonacci sequences, which are sequences of numbers that are waves that happen over time. We follow Gann cycles. Gann was a well-known stock market forecaster who used cycles in his research. We use technical analysis and charting, which is simply following cycles. They're just the pattern on the piece of paper that is part of a cycle. But cycles can be found more than just in women's systems and in seasonal patterns. It can be found in all financial markets. And this is something that people at a very high level know, but the typical financial Wall Street person isn't as adept at this information. So I went straight to the source and interviewed Dr. Nenner for you for this anniversary of my podcast. Our interview was in late October, so you'll see that some things have already transpired, and you'll see that there is a degree of accuracy with what he has to say that's already happened. The sad thing for me is that the recording did not come in as clearly as I would have liked. Dr. Nenner was in Dubai, and the international connection we had was very difficult. So there is an echoiness to the recording, and for that, I sincerely apologize. I worked with the reverb and a lot of things to try and clear that out, but to no avail. So the recording we have is the best that I could come up with. So again, my apologies that there is echoing in his side of the conversation. Dr. Nenner is from Amsterdam originally, and he does have a bit of an accent. So that might be a challenge for some people too, but I promise you the information in this interview is very, very interesting and something unlike what you've probably heard before. Now, if you're not a person who wants to hear something a little more esoteric, this is probably a good time for you to exit. But for those of you who have an open mind or who do like cycles or who have read my Wealth Heiress book and loved the chapter on cycles and understand that this is something that has been documented and researched and is something that I think is fascinating to learn more about. I mentioned that I have another book coming out, and indeed, I do. And on Friday, I'll be announcing the date of the launch of my next book, and I'll be sharing some excerpts with you. So I hope you tune in on Friday to hear all about that. I also included in my second book a lot of information about cycles and take it a little bit further than I did in the first book. So for those of you who wanted to hear more about cycles, I think you're going to really enjoy that. All right, without further ado, let's hear my interview with Dr. Charles Nenner. Well, it is my pleasure today to have Charles Nenner on the podcast. Welcome, Dr. Nenner. How are you?
Thank you. Happy to be with you.
Great. Well, a lot of my listeners have read my Wealth Heiress book, and they may be familiar with who you are. You're very famous, but not everyone may be familiar with your work. And I highlighted it in my books because I really found the importance of cycles after following you on television for a while. And I wanted to get more in depth talking about cycles because it is what my readers say is their favorite chapter, and they always say, I want to know more about cycles. So can you tell us a little bit about how you found them and how you describe what cycles are?
Yes, after how you presented me, I'm even myself, I'm interested to know what I'm going to say. So let's make a start. I'm trained as a medical doctor, and I participated in psychiatry research. And the research was trying to find out if people become more psychotic in certain periods with regular intervals, and also if that happens in different places in the world at the same time. Now, we knew that if it's full moon, a lot of women give early birth, so the delivery is coming before the 9 months. And what you have to do as a doctor, you have to make sure that you have enough personnel, not knowing why it really happens. Up to today, we don't know why that happens. By the way, that is, if you want to approach Wall Street, it's a very good attitude to be a doctor, because a doctor, if he's being told the red pill is going to save your life, he gives the red pill, even if he doesn't understand it. Now, people on Wall Street, and I saw that at my time at Goldman Sachs, are people who study the economy, and as long as they don't understand what's going on, they have a big problem working with certain things that haven't been proven correct. But to go back to the research, so we found indeed out that all over the world, at certain periods, people became more psychotic, and it was a very interesting thing to discover. While I was still waiting to be admitted to be a pediatrician, I went with a friend to New York, and I was watching CNBC. Most people know CNBC. And I was listening while he was doing business in the lounge, and trying to understand why stocks go up and down. I had no clue about Wall Street. And it didn't make much sense. So when I came back to Amsterdam, at that time I lived in Amsterdam, I went to the library and I took Wall Street journals of 30, 40 years. going back because there were almost no computers at that time, and I started working by hand, and we're looking at certain periods when markets went up and when markets went down, based on the fact that in the research we did about influx of psychotic patients, we found out that certain things happen at certain intervals. And indeed, I found out that between so many months and so many years and so many weeks, markets go up and markets go down. And when there was more development in the area of computers, I started writing what they call today neural networks. That is the computer who doesn't have to do it by hand like I do it, but can look at 30, 40 years of history and find the cycles, in this case, when a market bottoms or when it tops. Now, there are different kind of cycles. There are long-term cycles, yearly cycles, and within yearly cycles, the monthly cycle, which means is that, just an example, if the 1st of January there's a long-term cycle low, and the yearly cycle goes up for 5 years, in between, of course, you have ups and downs, because those up and downs are being driven by the monthly cycle. And within the monthly cycle, the weekly cycle, up to intraday cycles. We have a service for intraday people that we can even pinpoint at which hour what is going to happen. So we can say at 3 o'clock the S&P goes up till tomorrow 8:15, and then it goes down, just an example, till 4 o'clock. Now, the other thing that I found out, and most people who had the physics in high school know, that there are formulas that if you shoot a bullet in the air, how high it goes and how long it takes until it goes down. So based on that idea, I thought, what if a stock goes up with a certain momentum? Maybe I can also calculate how long it stays up and how high it goes. And indeed, we found the formulas, and we programmed them in a computer. So now we can see for certain assets, if the cycle bottoms, it will go up, and till which day or which month it will go up, and how high it will go up, which takes out all the noise and all the media and whatever you should not follow in order to be very successful in investing.
Right. So what you say is that the cycle is what leads, and then you find out why it did that in the news later, right?
Yeah, I usually give an example. Let's say IBM goes up this year 50%, and then IBM comes out with great results. Now the question is, does IBM go up or does IBM go down? If the results are great, you can say IBM goes up, and the Wall Street Journal will write the next day, people poured into IBM because they're doing great. But what if the cycle goes down? Then IBM has to go down, but the numbers are still great. So then the Wall Street Journal might write, people took profit because they don't think IBM can do better next time. Which means is that not even the results are important, but the interpretation of the results are much more important. And the cycle rules the interpretation of the facts. I give an example sometimes, you have to see that there was 9/11, as we all know, and we would say the market did crash. Now, I'm from Europe, and I can tell you that for 6 weeks the market came down strongly before 9/11, and one day after 9/11, the market went up for 3 days, it came down for 2 days, and it never came down again. So now you have to be very careful to say, did 9/11 bring down the stock market? Well, according to the research I can show, is it didn't bring down the stock market. Did the stock market know something was going to happen? Yes, I guess the stock market knew something was going to happen, but didn't know what. And once it happened, so what they say is in Wall Street, sell on the rumor and buy on the news. So the way that things function are not exactly like most people think they function. I remember when I was at Goldman Sachs, every year we had these great minds coming from Harvard, and they all read the same textbooks, and I was giving classes twice a week because we didn't get very far with their ideas about how market functions. So the interesting thing is that media for the last 30, 40 years don't pick it up, still talk about the same stories, and to my regret, the people that invest their money for later, they base everything on the stories that they read or they hear on television.
Yeah, people are very news driven, and they really believe that everything happening in the market is news driven. And it wasn't until I heard you that I started thinking differently. And now it's very interesting to observe things. And then, some days the news will say, well, we don't know why this is happening. And they're at a loss to explain it.
They always use the word as. As crude oil went up, the market came down. They don't say because crude oil went up, market came down. They always use the word as, which leaves you in limbo. Is that what they mean or that's not what they mean?
Yeah, it's very interesting. And if markets weren't predictable, you wouldn't be able to do your work. So you have some sayings about that, in physics, everything happens for a reason, right? And so markets don't move at random.
Yeah, at first it doesn't move at random. And then for people who know something about quantum physics, they have proven that it's not a cause and result. It's first a result and then there's a cause. And the scientist says on a philosophical level, we don't understand it, but on a mathematical level, that has been proven. So this whole thing of cause and result is not that simple. And so in the market, after you see a result and the cause is not there yet, or the cause is there, but we don't know it yet.
Yeah. Well, and it's been very interesting with the pandemic, everyone thinking that the market was going to fall apart, but yet people that follow cycles were doing the opposite and saying, no, the market isn't going to fall apart. How did it go for you following cycles during that time?
Well, the interesting thing is we were zero stocks before the market crashed, and I was on different media and I said it goes down 40%, and I had no idea why until this virus situation came up, and then we knew why. I myself, I don't have a good explanation how it works, especially if you talk about forecasts for sugar, corn, wheat, soybeans. My computer doesn't know what the weather is going to be. But for one reason or the other, the weather always follows the cycles. I'm amazed by it, and I still don't know how to explain it.
I've done a little bit of research with this through some authors named Dewey and Dakin, who in 1947 wrote a book about cycles that formed a secret group to really use this at a business level. And they took in a vice president of the United States, they took in captains of industry, they formed a cycles organization. And what they have sort of come up with, from what I can tell, and I'd like to hear what you think about this, is that in our sight, we don't see most of the spectrum, the light spectrum. We see very little of the whole light spectrum. And infrared, for example, we don't see. So they're saying that there's an energy field and that we're impacted by energy that's on a planetary level that impacts our planet. And that's why the full moon cycle is so interesting, because the full moon creates more energy, which is why more women give birth on a full moon than not. What do you think about that?
Well, I have a whole big piece. If you go to my website, you can see it about the sunspot intensity. And I found out, actually I didn't find out, I was looking at a chart of the Dow Jones, a yearly chart, and I had a friend who was an astronomer. He says that's just like the sunspot cycle of the sun. So we started looking at it. And I studied what NASA says about these things. And then we found out that the sunspot intensity actually is forecasting what the Dow Jones does. And my idea is, being a medical doctor, that first of all, it's not my idea, but it's been proven that the intensity of the sun that goes up and down leads to an electromagnetic field down in this world on the Earth. And then as a medical doctor, I saw that the crystallization of water changes with the electromagnetic field. Now, our brain is 80% water. So then you get more or less of the conundrum that Greenspan talked about, that things happen, has no clue why. So you can physically really bring it down to the intensity of the sunspots that influence the water crystallization in our brain, and that gives you certain interpretations, and based on those interpretations, we do invest or we don't invest. If you go to the website of NASA, it's very interesting. They have usually a forecast of a couple of weeks what intensity is, and then you can follow if the markets do the same thing. You can also Google the stories and the research of the last 100, 200 years about the sunspot intensity. And then you see that crash of 29 and 47 and 87, they were all predicted by the low intensity of the sunspot. And the 2007 had one of the lowest intensity of sunspots of the last 100 years. So they're totally right. Today we know more about it, and there is a physical component of these cycles.
Yeah, so the solar minimums coincide with recessions and depressions, and then the solar maximums are when everyone's irrationally exuberant. Is that right?
That's totally correct. And to my sorrow is it's since people are so conditioned to think differently, if they would just study this a little bit, it would be very profitable for the investments.
Yeah, it's completely different than the narrative that we hear on the news, that's for sure. And nobody would watch their programs if everyone knew that that's not exactly what's moving the markets. But a lot of hedge fund managers have migrated to more of a cycles forecast basis. And one of the interesting things about your cycles is you do so many cycles on agriculture, and we're in this high inflation time. What can you tell us about what you're seeing for future food prices?
Well, food prices will continue up. We just happen to be now way close to a low again in corn prices and soybean prices. So it's not over yet. This is a long-term bull market, and things are going to be expensive.
And so do you think these supply chain interruptions and shortages are going to continue for years, and we're going back to like a 1970s style inflation?
I don't think this supply problem is going to be there for long, but I think there are going to be a lot of big problems that they cannot deal with.
Yeah. Well, I mean, we're watching all of these ships being parked off of, Long Beach and other ports, and we're seeing all these containers just stacked and not moving. So at some point, this is all going to catch up with us, and a lot of people are saying it might be Christmas, it might be next year, that this could go on for years. So you're not really seeing that this is a long-term situation, if I'm hearing you right.
No, not very long-term, but the capitalism is being attacked in such a way that I think it's going to be very bad for the United States.
Wow. And a lot of people are thinking that at some point the commercial real estate market might, also have issues, and that might lead us into another downward cycle, or that might be the explanation for a downward cycle. Do you see the stock market going higher or lower in next year?
Well, we have a target on the S&P of 4,600. I think today we're 4,520 or so. So we just make sure that around 4,600 we're going to be out of the market. And I see some correction starting, I think, around the 12th of November.
Okay, and is that a long-term correction or a short-term?
It's going to be long-term, but it goes step by step. So it's going to start very slowly to suck everybody in again. And I remember that happened in the 2000 also, because at that time at Goldman Sachs, the cycle topped in March 2000, and I published it. And I tried to tell my friends, and they didn't take it seriously. So it goes down 5-6%. And I say, well, it's 5-6%, and then it goes back up 3%. Now only down 3%, and before you know it's 10%. And now it's too late to sell, and it goes up again. And, people get sucked in. So in the end, it's going to be lower, but it usually starts very, very slowly.
So how bad of a correction do you think that's going to be in November?
Well, that's a good question. I am always so busy, so I'm a bit behind. I didn't check that really how bad it's going to be. As I tell you about the momentum, what happens is if a cycle tops, let's say it tops, if I'm right, the 12th of November, then the market starts going down. And based on the momentum, then we can calculate how low it's going. I think the first phase will not go very low, maybe almost 8-9%, and then bounce again. And get everybody in again, and slowly, because if you look at how many stocks are supporting this market, the market is new highs, but the stocks above the 50 moving averages are making new highs. It's much less than a year ago when we're even lower than now. So some people are very cleverly selling in the market and all the time, get people buy the dips. And in the meantime, the big investors are selling. Now, somebody was buying around the low of 2009 when we had the cycle low and things looked terrible, and those people knew what was going to happen. So those people are selling now because they also know what's going to happen soon.
Mm-hmm. And that's kind of around the time where we're dealing with the debt limit and some of the financial issues at the government level. Do you see precious metals behaving strongly in that time?
Well, these precious metals, we're in a bull market that started, I think we started to go long in 2011. And the bull market in gold and silver is continued. The gold market actually very long term looks up until 2026, 2027. The silver market looks up until 2024, and especially now that long-term cycle. So now if you go a bit market timing, then it looks up until April next year. So I'm always afraid to say that, because what happens is some people will say, well, let me buy for the long term, and then if it goes against them for a couple of weeks because they don't watch the short-term cycles that like we do in the research, then they sell out and then it continues up. So people who say I'm in for the long term, my experience is if you buy gold, let's say at 1800, and it has to go according to me to 2,500, and you say I'm in there for the long term, then it goes to 70.50. Well, I'm in there for the long term. By the time it's 60.50, you can't handle it anymore and sell out with a loss. So that's why I'm always a bit hesitant for people who don't watch our cycles to tell what's going to happen long term. If you're really very long term and you're going to sit on it, you'll be okay for the next couple of years.
Yeah, and I think that's good advice, because trying to time every little cycle here and there is not a good idea. If someone has a 10-year time horizon or a 20-year time horizon, it's better for them just to, keep the long-term perspective. And if you're seeing a good cycle out to 2024 for silver and gold, then that gives us confidence that we can hang in there through it.
Yeah, but certain things like, the Bitcoin is so volatile, so that really goes up and down 50%. So you have to time that a little bit. By the way, the Bitcoin has an upside target of 72,000. We came very close. It still has time till October 28th. Then there's a kind of a cycle top. So we were looking to sell out soon, or when we get to 72,000 or around October 28th. That's how exactly the research is.
And after that correction, do you see Bitcoin going to these 6-digit numbers that a lot of people are? I think JP Morgan just came out today and said 150,000 for Bitcoin, yet their CEO, Jamie Dimon, is saying it's worth zero.
Well, I've always find these things interesting, because if you look at our research, and by the way, you people can get for 3 weeks, 4 weeks for free our research and see for themselves how it works. Even if they will not go in quantity, it's interesting to know what kind of knowledge there is in financial markets. But if people say that, I like to know how they calculate it. I always show how I calculate it. So I'm not impressed if somebody says 150 or 150,000, 200,000. You can throw any number you want, but if you can show me how it's being done, then it's interesting. I have no idea how they get to that number.
Yeah, but are you seeing a higher number for Bitcoin years out in the future?
Well, that's difficult, and I'll tell you why, because then I have to look at very long-term cycles, and Bitcoin's, the data I have, about 10 years old, so I cannot really make reliable long-term cycles. I need more data. So if I would have 20 years of data, then I could answer it, but now I don't have enough data.
Oh, that's really interesting. You need about 20 years of data. So is 20 years a full cycle? Is that what you consider to be a full cycle?
No, but a full cycle, let's say a full cycle on Bitcoin, a yearly cycle could be maybe every 3 years. So in 10 years, I got 2 bottoms, and that's not enough. I need, my experience is I need 5 bottoms to calculate and assume that the cycle is valid.
Oh, how interesting. Okay. What areas are you seeing look really attractive to invest in now?
What looks, and it's counterintuitive, what I see is that soon we have a big low in the bond market. I tried to figure out myself why. That's not my profession, but I still like to figure out why that is. Is that because there's going to be fear for one reason or the other? But it's going to be counterintuitive, and we're waiting for the weekly cycles in a couple of weeks to bottom in order to take a long position in bonds. We have been out already, I don't know from how long, a year or so out of the bond market, and then it's time to get back in.
So you're seeing bond valuations go higher soon. And so that might mean that we are either in a deflationary time or we possibly go into negative interest rates.
Maybe you remember we once talked about it, that I also do war cycles.
Mm-hmm.
And we're in a period that big wars can erupt. So there's really the danger of a big conflict coming on. For people who find this interesting, the different war cycles, the easiest thing to look in, if it really works, is to take the 100-year war cycle. And the 100-year war cycle says that always around the second decade of a new century, that's now, a big war erupts. So if you go back 100 years, then you go to 1918, 1920, the First World War. And if you go 100 years before that, you get to 17, 18, 16, Napoleon. And if you go before that, it's called the Habsburg War. Now, because I'm European, I know more about these wars. There have been more wars than in the United States. But if you Google big wars around the change of the century, it's very interesting that every 100 years, and then around the second decade, is a big war. Now, it's unbelievable how that is possible. But then you find one war cycle. So there are more war cycles. I started with the Mandarin Empire 3,000 years ago, and I brought all these things in the computer, and we're in a very dangerous situation right now. So it could be one reason that we're going to have a big conflict. It could be that the market comes down and that people have to go somewhere with the money, so then out of fear they go into the bond market. And it could be what you said, the deflation scenario that we have to wait for, but something is going to happen.
Wow. This has been fascinating to talk with you about. How can people get your free research, Charles?
Well, if they come to you, they get 4 weeks for free. They go to charlesnenner.com, and that at least they see what's possible. It takes not more than a couple of minutes. We update 4 or 5 times a day. A week, sometimes intraday. Just take a look what we say and what happens. To get an idea that things are much more predictable than you think. And the interesting thing is, later look at the news.
Yeah. And what I've found from doing that research is that there is a whole nother world that's not being shared with us, but that is being used at a very elite level to make people a lot of money.
But to give you one last example was Facebook. We expected the big down move from Facebook, and that was 3 weeks before this mess with Facebook started. And when Facebook, went out of control, then okay, now we know what happened. How did this possible? I can't tell you. I'm happy that we know that it functions, and I leave it up to your people if they have an idea to explain to me why it works.
Exactly. Well, this has been fascinating. Thank you so much. I hope we can do this again sometime.
Okay, we'll do that.
Okay, thank you.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.